Hey guys, it's that time when I get to bring you a little bit of market update, tell you a little bit about the vital signs in the marketplace. And this time we're going to take a look at the third quarter of 2019 and how it compared to the third quarter of 2018. Give you a bit of a big picture, broader view of what is actually happening, not just in our economy, but in our marketplace, our homes, values here in Hampton Roads. And once we get through that, I want to tell you a little bit about what's going on in the volatile world of mortgage interest rates. And then we're going to do a little bit of prognostication over what we expect to see in 2020. So I'll share those with you, as well as what we normally cover, what's happening in your hometown, Chesapeake, Norfolk, and Virginia Beach. So when we look at the third quarter of 2019, we've got some pretty big numbers and relative to where we were in 2018. Our month supply of inventory is actually down this year 3.1 months of inventory. So in the last few reports, I've talked to you about the absorption rates, and this is exactly what we're talking about here. We could absorb all the inventory we have in about 3.1 months if nothing else came back on the market. Last year at this time, it was 3.7 months. Doesn't seem like a lot, but when you look at it relative to last year, it has come down, which means our inventory has come down. We've sold more homes in the third quarter of 2019, almost 600 more homes in Hampton Roads than we did in 2018. 8,300 compared to 7,700 just this time last year. The homes that are actually on the market, that has dropped. That has dropped exponentially. It's down from 9,800 in 2018 to this time this year at 8,400. And our median days on the market has dropped even more from 35 days to 29 days. And if you've been paying attention to these market reports, you'll know that that number's been ticking down. And it's also ticking down across the country. 49% of homes across the country are selling in less than 30 days. So it's a new trend in the market. I can remember back in the day when we thought it was a big deal to sell a house in 60 or 70 or 80 days. We even had signs made up to tell people just how things were selling. The average sales price, so this reduction in inventory and this reduction in average towns in the market has, I'll tell you what it's done, is put an upward pressure on our home values. We've seen this quarter last year, average sales price in Hampton Roads, $267,000. Now, third quarter of 2019, $278,000, almost $279,000. So lots going on there. Where were we in the stock market this time last year? The S&P was at 2885, this year 2952. Consumer Price Index up from 252 to 256. For some reason, with our unemployment having dropped from 3.9 to 3.8, our consumer confidence is down from 135 down to 125. And we're going to talk a little bit about what that means and perhaps why we're seeing that and how that affects our mortgage rates. So I told you a little bit of prognostication. There was a survey just done recently. The guys over at Keeping Current Matters, Steve Harney and crew, they surveyed Freddie Mac, Fannie Mae, and the Mortgage Bankers Association. And you're going to see on this chart right here the total single-family home sales predicted in 2020 over 2019 as going up. So all three of the major home selling organizations, the mortgage organizations, Fannie Mae, Freddie Mac, and the Mortgage Bankers Association are predicting a growth in home sales in 2020 over 2019, which was already up over 2018. So where does that put us? And with all of this talk about recession? Well, sometimes it's just hard to believe that if it's too good to be true, it must not be. But we have been just steaming along in a super strong economy, and yet everybody keeps waiting for this recession. We've talked in reports past about is it real estate driven or is it not? What effect is it going to have on real estate sales and sales prices? Well, this is what we're seeing. In only one out of the last 7 recessions has real estate been affected negatively, okay? And so we don't see this as being a real estate driven recession, and we also don't see a recession putting negative pressure on our real estate market. So we know what the guys who who give the money away and control the money and set the pace, they see it going upwards. Let's talk about interest rates just a little bit. Lots of volatility out there. The global economy definitely in flux with trade wars we talked about last time and the whole Brexit brouhaha that they can't get straightened out. It has put some carefulness back into that, and everybody's just worried how it's going to feel on our economy. What that means is the Fed is going to start to lower the rates a little bit. That's putting increased pressure on the 10-year Treasury, and we're starting to see reports of interest rates, mortgage interest rates, going lower and lower and lower as the beginning of the year rolls around. So today we're seeing somewhere in the 3.875, just under 4 for a 30-year fixed conventional rates, and even lower on government rates like FHA and VA, well down into the low 3s. So what does that mean to our Hampton Roads real estate market? This is what I told you I would tell you. Let's talk about Chesapeake and what we're seeing in Chesapeake. Last month, 336 homes sold. That average sales price is up another 1% over last year to $304,000. That means they're selling selling at about $148 a square foot. Their median days on the market in Chesapeake, Virginia right now, 21 days. 58% of those homes are selling within 30 days, and there's 500 under contract right now and only 1,100 actively for sale. How about Norfolk? We keep seeing great gains in Norfolk, and listen to this. Last month, we sold 274 homes in Norfolk. It's down a little over last month, but up 12% over last year. Let's hear it for our friends over at Chandler Real Estate, now part of the Rosenwomble family. $134 a square foot. Again, that average sales price is up to $243,000, up almost 6.5% over this time last year. And homes under contract, 268, a little bit of slowdown, but also a slowdown in the number of listings. Now let's talk about the big city where a lot of things happen out there. The absorption rate continues to remain super low. All the price ranges, if you're in the $200,000 to $250,000 price range, whether you're buying or selling, there is lots to happen out there. Last September, 652 homes were sold. That's down a little bit from last month, but up 18% over last year. Average sales price, $340,000. $168 a square foot. So when you call me to come find out the value of your home or the home you want to look at, we're going to be looking at numbers just like this. 57% of the homes are selling in less than 30 days with an average market time, again, of only 23 days. So listen, that's what's going on in Hampton Roads. That's what's going on in the global economy. That's what's happening with interest rates. And really a little bit about what's going on year over year and where we see this market going. But you know what? There's an old saying that says all real estate is local. So when it comes down to finding out the house you want to buy or perhaps the house you want to sell, do yourself a favor. Touch base. I'm going to show you a quote here from Dave Ramsey. Make sure you're talking to somebody that doesn't have the heart of a salesman, but the heart of a teacher. And that means a lot. It means a lot to me. And this is the kind of things that I want to talk to you about. I want to be of service to you. And that's what we have for this month's market report. Lots of information, lots of data. Happy to share these things with you or come and sit and talk with you over a cup of coffee. Love to do that. So listen, be safe out there. Check out the beautiful fall colors. Enjoy the cool weather. And remember to watch out for cyclists. I might be one of them.